Hey guys, hello and welcome to this YouTube series. I'm Manisha Gupta and we are going to be talking series on blockchains and cryptocurrencies. Blockchain, clearly you've seen, heard a lot about it. You've read perhaps various definitions as well. But the easiest one of that all is that blockchain is a collection of blocks. Each block is a collection of transactions, and that is what really makes a blockchain. All the computers who have access to that blockchain will have an access to all the blocks and transactions within that as well. So if there is an addition, deletion, modification, your computer will also get an update on what really is changing into that one. So this is clearly deregularized. It is something that you will have an access to, and if one thing changes, everybody in that blockchain, in that network gets to know about that. Now, what is a Bitcoin? You know, there are 1,600 cryptocurrencies in the world that are trading right now. And out of that 1,600, the first one to be released was in 2009, and that was Bitcoin. The highest market capital also belongs to Bitcoin. And this is the best performing asset class, by the way. When you look at cryptocurrencies, nearly 160% of return is what we've seen come in from Bitcoin. 300% plus kind of return is what Ethereum and Ripple, these are the other two currencies which have a very high market capital as well, is what they have given to you as a return if you invested on them on 1st of Jan 2020. So it has been quite a phenomenal year. While we have seen all-time highs in equities and gold, but the cryptocurrencies are not far behind as well. And we've seen very strong gain, 3-digit gains come in for many of these as well. So Bitcoin is what we are looking at this point in time. As I told you, it was released in 2009 and it has been around since then. But the major gains for Bitcoin really came in 2017, and after that in 2020, where it has been a talk of town. When we dwell slightly longer into the cryptocurrencies here. Well, it can be created, it can be distributed, traded, stored with the use of decentralized ledger system as well. There is an important key to this, which is known as a Bitcoin key, which is public as well as private. When you buy a Bitcoin, you would be given a series of numbers here. So one is, and this is a long string of letters and numbers. There are two ways to this, or two numbers to this. One is the public key. This is like a bank account number. This is what your number is. The other is a private key, which is more like a password. So a combination of this is what will lead you to access your Bitcoins there. Bitcoin mining is another thing which is quite favorite among the youth right now. You talk to a lot of students, you talk to a lot of entrepreneurs, and they will tell you that they are doing mining of Bitcoins or Ethereum for that matter. So this is a process by which the Bitcoins are released into the circulation. Miners receive rewards when they mine this as well. Long back, way back in 2009, if you mined Bitcoins, the reward was 50 Bitcoins. But since more and more people are getting into it now, and because the mining of Bitcoin is increased so much, in 2020, that reward has come down to 6 Bitcoins, because the kind of number is just phenomenal there. The other thing is that the Bitcoin software is available, it's free online, but the investment or what you need to invest is quite higher, is the reason lesser and lesser people also do it. 21 million Bitcoins will ever be mined. That is the number, that is how the transaction or the blockchain really started onto this one. The total supply in the markets already is at 18.56 million Bitcoins. So there is a limit to that, is the reason that you have lesser rewards coming in, and is also the reason that the Bitcoin prices have been going through the roof. That is because there is a limited supply to that. When you look at other Bitcoins like an Ethereum, the supply is determined by the Ethereum community. When you look at Ripple, there as well, there is no cap to supply. So when it comes to Bitcoin, there is a limitation on supply on the higher side, is the reason you have seen way more authority here, and the price is running up like that as well. If you own a Bitcoin, I already told you that you are sitting on a very hefty profit onto that right now. But the way the governments look at it, whether it's India or various other governments, it is seen as a property rather than currency, and that's exactly how it's taxed as well. Also, the gains arising from your investment in Bitcoins are seen as capital gains, and you will be taxed accordingly as well. Well, as far as the regulations into this go, that's a bit of a gray area here. Remember, in Indian markets, the RBI had banned banks and other financial institutions to facilitate buying, selling or trading of cryptocurrencies. But this was in March of 2020 when the Supreme Court struck that off, and since then hundreds of exchanges have come back in India which offer cryptocurrencies trading, buying, selling, holding in wallets, etc. But even now, what the governments don't like is that it is decentralized. And that really leads to the fact that there is black market transactions that could happen here, money laundering, illegal activities, tax evasions. People who want to be anonymous actually may perhaps end up dealing with bitcoins. So the governments clearly are looking into it quite closely now. The lack of uniform regulations is one of the reasons that not too many people are comfortable getting into bitcoins. But even from where we stand right now, the reports do suggest that nearly 6 million people in India at one point or other have bought Bitcoin and perhaps are holding it as well. So there is a number there. The prices have run up. A lot of people will tell you that it is a must in your portfolio, but the lack of regulations or the lack of understanding of it perhaps are few reasons that not too many people or more and more people are not joining into this right now. You know, and the other thing also is the volatility of it. There are days when Bitcoin in this year as well have moved almost around 20 to 25%. In 2013, at one point in time, Bitcoin had declined by 60%. In 2014, there's an instance when you saw Bitcoin decline by 80% as well. So yes, the kind of volatility that these cryptocurrencies show, not everybody can stomach it. The other thing really is that there are questions about the longevity, the liquidity, and also the universality about the Bitcoins. One thing is very clear, like gold, I mean, I don't know if you can give that as an example, but like gold, Bitcoins or cryptocurrencies for that matter are universal. They can be bought and sold in any country, and especially with institutions now recommending it or buying it for themselves or investing in it. Markets have started to believe that it perhaps is not a bubble, and with it testing the times right now, there is more credibility coming into various cryptocurrencies right now. So we've talked about Bitcoin today on how it works and how the prices have been and how it has been in last many years since it's launched in 2009. But we will continue and we will dive deeper into what blockchain means, how it can be used in various sectors, how it would change your life, and various other currencies as well. So this is just an introduction, and we will be back with more.